Morning or good afternoon, depending upon where you are. This is Bill Neville with the Entrust Group. Thanks for joining our monthly webinar. This month we have a guest speaker, Michael Sewell, who has his own firm, Sewell Law. We really appreciate Michael for being here. We're going to talk about doing a Checkbook LLC inside your IRA, Checkbook controlled LLC within your IRA. Just quick little housekeeping note. We will go through a question and answer session at the end. Just go ahead and type in your question in the chat box. And you can type it now. You can wait till the end. You could type it throughout. But at the end of the presentation, we will go through and answer all those questions. So again, feel free to type those in as we're going along. And we'll go ahead and get started. So again, take control of your real estate investments with a Checkbook IRA LLC. Note, we're not telling you to do that. We're just going to talk about the availability and the option for you to do that. I'm Bill Neville, Business Development Manager with the Entrust Group, and Michael Sewell is our guest presenter today, who comes from Sewell Law. Real quickly, as we always do in these presentations, I put this up to note that Entrust does not provide investment advice or endorse or promote any particular investment. All the information that is being presented here is for educational purposes only, and we encourage you strongly before making any investments or making any decisions to consult with any attorneys, accountants, financial advisors, etc. before entering into any type of investment. Note that Entrust does not provide that kind of advice. We are third-party record keepers and custodians of what are called self-directed retirement accounts. So we're going to talk a little bit about Entrust, what exactly is a self-directed IRA, the benefits you get from self-direction, and then we'll get into the LLC portion of it, and that's where Michael's going to take over. And then at the end, we'll have some Q&A and just a real quick discussion on how you can get started if you want to move forward with opening an account. As far as Entrust is concerned, we have been in business since 1981, so for over 38 years. We have at this point, over 22,000 accounts. We hold almost $3.5 billion in investor assets. And how we differentiate, the big way we differentiate ourselves from our competitors is that we provide all of our account holders a single point of contact. So I am a business development manager, a regional business development manager. I have counterparts in the company who have regions of the country. And so depending upon if you are referred to us by a referral partner or if you're in a certain part of the country, you get a business development manager who is your point of contact. So if you have any questions, need assistance, you're not just calling an 800 number and getting whoever happens to answer the phone. You will get your single point of contact, which would be me or my counterpart, and then we all have assistants to assist you with any questions you have. We focus on education. We are very much an leader in the education part of our industry. The majority of our staff is certified IRA services professionals. We have, as I mentioned, nationwide offices. We're headquartered in Oakland, California, but we have regional business development managers and as well as an office in Reno, Nevada. We have a national continuing education program for realtors, certified financial planners, and CPAs. So it's on an invitation basis. If you particularly realtors in certain states, if you want to have a 2-hour, 2-credit class about self-directed IRAs and particularly real estate IRAs, we do provide that, but it's a scenario where we get invited. So if you have an office or a realtor association or something like that that wants to have the 2-hour class, then we would be happy to do that. And then, of course, we do lots of events and webinars. We have the monthly webinar. And then we host the IRA Academy, and we are the only company that does this. We actually train other companies in our industry to pass the certified IRA services professionals. So we are so much the leaders and educators that we are the ones who are educating other companies, our competitors in our space, on self-directed IRAs and the information needed to pass the certified IRA services professional class. Sorry, I got to turn my volume down on my computer. Okay. So what exactly is a self-directed IRA? It is simply a retirement account, a traditional IRA, a Roth IRA, a 401k, a SEP, whatever type of account that you have. in which you as the individual investor has control over your investment decisions. So what we mean by that is when you have an account with a typical brokerage firm like Charles Schwab, Fidelity, Merrill Lynch, Edward Jones, all of those companies, they limit you to only investing in publicly traded stocks, bonds, and mutual funds. But within a retirement account, you are allowed to hold other assets besides stocks, bonds, and mutual funds like real estate, precious metals, LLCs, startup companies, promissory notes, tax liens, trust deeds, cryptocurrencies becoming popular, investments in the cannabis industry are becoming popular. All those are allowed to be invested inside a retirement account, but you have to have your account with a custodian who's willing to hold those assets. And that's what self-direction means, is that you're not just limited to stocks, bonds, and mutual funds. You can invest in non-traditional assets. And you have to make your own investment decisions. We at Entrust don't advise you. We don't do any due diligence on the investment that you're going to make. It's your responsibility to do your own research, find the investment you want to make, and then you instruct your custodian to make that investment inside your retirement account. So if you want to buy a rental property, or if you want to invest in a private company or an LLC, then you can do that. Legally, you're allowed to do that, but you have to have your account with a custodian who's willing to hold it, and that's where Entrust comes in. So it allows you to diversify and not just be limited to stocks, bonds, and mutual funds. In order for a retirement account to be considered a retirement account, it has to be administered and held by a custodian. So Entrust and Entrust Trust Company and the Entrust Group, we are custodians and record keepers of your retirement account. But again, self-directed. You make all your own investment decisions. And the next to last bullet point, due diligence is your responsibility. It is not the custodian's responsibility to do any due diligence on your investment or do any research to make sure that it's a good investment. And we fall under all the same regulations and requirements of the Internal Revenue Code that any traditional brokerage firm like, again, Charles Schwab, Merrill Lynch, Fidelity, all those companies, we have to abide by all the same Internal Revenue Code rulings that they have to. Again, the only difference is that they advise you and sell you stocks, bonds, and mutual funds. We don't advise you, and we will hold non-traditional assets. Okay. So what are the benefits? You get to take control and make your own investment choices. You're not just limited to what a broker or advisor recommends for you. If you think that real estate's a good investment, this allows you to do that. If you think precious metals are a good investment, you're allowed to do that. If you think cryptocurrency is a good investment, this allows you to do that. So you can diversify and not just be limited to stocks, bonds, and mutual funds, and you get the tax benefits associated with it. So if you invest in real estate, for example, inside your retirement account, and if you invest in real estate outside your retirement account and you want to sell it, in order to avoid capital gains tax, you have to 1031 exchange it. But when you do it inside your retirement account, the account buys the investment, the account sells the investment, the account receives all the rental income or revenue generated from it, so it's all held inside a tax-sheltered entity. So there are no tax consequences. The only tax consequences occur when you take an actual withdrawal from your retirement account. So you get the tax benefit. And on that note, I'm going to pass this over to Michael, who I have to say really stepped in for us, because we had originally had another person that we worked with that was scheduled to do this, and it turns out that on very short notice he was unable to make it, and we contacted Michael. And again, on very short notice, and despite a very busy schedule, stepped up and offered to join us here. So Michael, thanks again, and take it away from here.
Well, thank you, Bill, and hello, everybody. And thank you for that introduction and the caveat to the last-minute addition here to the show. So my name is Michael Sewell. I founded Sewell Law in 2015. Prior to that, for about 10 years, I worked as a litigator for a mid-sized law firm in St. Louis, Missouri, where I handled primarily real estate and business litigation. I formed Sewell Law in 2015 because I had built a sizable client base of real estate investors of all size, single parcel of real estate up to a few thousand residential units. So I went out on my own, formed Sewell Law, and I provide a lot of litigation still, a lot of litigation services to real estate people, business aspects as well, contract litigation, things like that. I also do a lot of transactional work for real estate investors, a fair amount of private capital raising, and along with that is a lot of LLC formation. Probably about 95% of all of the entities that I form for my clients are LLCs. The vast majority of them are traditional LLCs. Missouri, among about a dozen states, has a series LLC law, which is a nice feature for real estate holdings. We also work with real estate brokers and form broker LLCs, and we do a fair amount of self-directed IRA LLCs. So before I get into my portion of self-directed IRA LLCs, let me, as with Bill, give you a little bit of a disclaimer. So the slides that I'm going to be presenting to you today are for informational purposes only. They are not intended, nor should you construe them as legal advice. I am an attorney, but I'm not your attorney, so you should not take any action or refrain from taking any action based on my comments or the slides that I'm going to be reviewing today. Rather, as Bill said, you should make your decisions about investing through a self-directed IRA only after consulting with legal and tax advisors who are familiar with and experienced with the legal and tax issues related to self-directed IRAs. So before I talk about LLCs, we need to just very briefly, for those of you, and I imagine most of you have heard of and understand generally the prohibited transactions that go along with self-directed IRAs, and these are transactions that are prohibited by the U.S. tax code. So the general saying about self-directed IRAs or IRAs in general is that generally the tax code tells you what you can't do, not what you can do. So it's very important, whether or not you're going to be investing your IRA funds through an LLC, to have a good understanding of what the prohibited transactions are. So prohibited transactions, again, are specified through the U.S. tax code. Specifically, it's section 4975 of the U.S. tax code. And there are a handful of prohibited transactions. These are very general statements, and it's frankly hard to in many instances, understand or determine whether or not the transaction that you are contemplating might fall within one of these descriptions. But generally, the code defines as a prohibited transaction a sale or exchange or leasing of any property between an IRA and a disqualified person. And in a moment, I'll go through what a disqualified person is. Secondly, prohibited transaction includes any lending of money or extension of credit between an IRA and a disqualified person. And by the way, the owner of an IRA account is always a disqualified person. The third prohibited transaction is the furnishing of goods, services, or facilities between the IRA and a disqualified person. So if you're a little familiar with real estate, you know that you're not supposed to perform any work, sweat equity in any of the property that you might purchase through your IRA or through a self-directed IRA LLC. The next category is transferring of any income or assets between a disqualified person and the IRA. And the last one is, the IRS uses this a fair amount. It's self-dealing, which means you, generally, dealing with the income or assets of the IRA or of the IRA LLC for your own account or interest. So it's kind of a broad statement, but those are generally the prohibited transactions. Now, the code also prohibits investment in collectibles with the exception of very specific types of precious metals and bullion, which is specified in the tax code. And you are also prohibited from investing in life insurance contracts. So a disqualified person, as I said, would be you as the IRA owner your spouse, your grandparents, your son, grandson, daughter, granddaughter, and their spouses. And a disqualified person is also basically any entity in which you, or I should say your IRA, owns at least 50% of the interest in that entity. And it also includes officers and directors of the entity, other shareholders that comprise at least 10% of all shareholders, and if it's a partnership or an LLC, other partners or members that own 10% or more of the profit or capital interest in the partnership or LLC. So as a little bit of a caveat to disqualified persons, the family members is kind of a catch-all category. And one of the way the IRS through the tax code talks about family is ancestors, which are, of course, people who were born before you, grandparents. So most people think, okay, aunts and uncles are okay, they're not disqualified persons, and that may or may not be true. I just throw that out as something to think about because there is something called collateral ancestors, which are aunts and uncles. So as you are contemplating who you might invest with in the way of relations or family members, just keep that in mind as a potential issue. So the reason I went through prohibited transactions is because if you commit or another person who meets the definition of a disqualified person performs a prohibited transaction and the IRS discovers it, the IRS will deem your IRA to be fully distributed on the first day of the year in which the prohibited transaction occurred. So it's a pretty serious event, tax consequence to you as the owner of the IRA, because now you have to pay your ordinary income tax as well as interest and penalties on the amount that is distributed. There's also a penalty provided in the tax code for disqualified persons other than you who are involved in the prohibited transaction. They are subject to a tax of 15% of the value of the transaction, and if the prohibited transaction, the infraction, is not corrected within the taxable period, they're subject to a 100% tax on the value of the transaction. So I bring these to your attention because when we're talking about LLCs, there is opportunity for prohibited transactions, and so you need to understand what a prohibited transaction is. Entrust has a lot of material on their website. I have a few articles on my website at sewelllaw.net that you can access to get more information on prohibited transactions, disqualified persons, so on and so forth. So the question is, why form an LLC and invest through the LLC? One reason is the potential of liability protection. When you invest through a self-directed IRA, for example, in real estate, and somebody has a claim against the IRA related to that real estate, for example, let's say it's a single-family house, and somebody has a slip and fall accident, and they're going to sue who? The owner of the real estate, which is the IRA. And if that person gets a judgment against the IRA, that judgment creditor can actually seize IRA assets in order to satisfy that judgment. If you purchase that property through an LLC that is owned by the IRA, theoretically, it's the LLC who is the owner. It's not theoretically, as a matter of law it is, the owner of that property. And so the rightful defendant in such a lawsuit would be the LLC. And if the person gets a judgment against the LLC, they generally will only be able to and should only be able to seize assets owned by the LLC in order to satisfy that judgment. If you still have assets or capital in the account of the IRA, that should be shielded from this type of event, so that somebody with a judgment against the LLC should not be able to reach in also to the IRA account and seize those assets in order to satisfy the judgment. Now, I haven't seen any cases that deal with that issue, but as a matter of law, that's the way it should occur. So I'm not telling you that it's an absolute shield, but it's certainly an asset protection firewall that should provide protection to assets that are still held back in the IRA account. You know, as Bill alluded to, there is checkbook control, so rather than having to ask the administrator to issue a check or sign contracts in order to execute your real estate, for example, transactions, all of that can be handled through the LLC, and you bypass both the fees and the administration of the custodian or the administrator. And obviously that's a savings. So you might also ask, well, why an LLC instead of a corporation or a partnership or some other legal entity? The reason for an LLC is primarily for tax reasons. If you form a corporation, have your IRA as the majority or sole shareholder of that corporation, and then use the corporation to, again, for example, buy real estate, whatever income and gain is realized through that investment is going to be taxed at the corporate rate of 21% generally, and you're not going to have the, you will only have the pass-through advantage, tax advantage, in terms of the dividend distributions that are made back to the IRA. So a corporation incurs what's called double taxation. When a corporation earns income or gain, that corporation is liable for the payment of those taxes. And again, regardless of whether or not the IRA is the sole shareholder of that corporation. The way you get money out of the corporation and send it back to the IRA is through a dividend distribution. And generally that dividend distribution is going to be tax-free because with its IRA funds, that it's going back to the IRA as income earned through IRA funds. And so that will generally be tax-free. So there are instances where it might make sense to form a corporation, have the IRA as the sole shareholder of the corporation. It's called a blocker corporation. And you would do that in circumstances where the type of investment you're making with your IRA funds will incur what's called unrelated business taxable income or unrelated debt-financed income, both of which are taxed types of income. And your IRA is liable for the payment of those taxes. And the unfortunate thing is the IRA is taxed at the trust rate, which is 37% rate on amounts of income of $12,500 or more. So it's a pretty hefty tax rate. So if you have UBTI or UDFI, you might be able to lower that down to 21% instead of 37% by running that through a corporation instead of through an LLC, because again, the LLC is a pass-through entity, and that UBTI and UDFI are going to be taxed at the trust rate. All right, so now getting into a little bit of the meat of self-directed IRA LLCs. There is no such thing in the tax code called a self-directed IRA LLC. an IRA can certainly invest in a partnership or an LLC. However, investments of 50% or greater cause that entity to become a disqualified person. So when you form an LLC or self-directed IRA LLC, typically it's done where your IRA is the sole member of the LLC, and you will be, for example, as the owner of the IRA account, the manager of the LLC. Now again, because the IRA owns 100% of the membership interest, the LLC is going to be a disqualified person. So this is very important when people who are thinking about forming a self-directed IRA LLC or who have one are primarily concerned about the prohibited transactions that occur after the LLC is set up and the funds have been transferred from the IRA to the LLC and you start investing. And that's when you become worried about, well, is this transaction going to be a prohibited transaction? In fact, that should be a question before you even begin to set up the LLC. Again, the IRS has not provided any sort of regulations. Congress has provided no laws that allow for self-directed IRA LLC. So you have to work within the prohibited transactions laws as they exist. And the IRS, at least historically, has been a little bit hostile toward entities that are 100% owned by or majority owned by the IRA. And many of you have probably heard of Swanson versus the Commissioner. That was decided by the U.S. Tax Court back in 1996. And it involved a corporation. And Mr. Swanson formed a corporation. He had his IRA distribute funds to the bank account of the corporation, and then he issued stock to the IRA. And then later on, when the corporation earned profit, he then directed the corporation to make dividend distributions back to the IRA. And the IRS claimed that both of those transactions were prohibited, so that the IRS alleged that the exchange between the IRA and the corporation was prohibited. So, transferring funds to the corporation was in line with the first type of prohibited transaction that we discussed. And the second leg was the dividend distributions the IRS claimed was self-dealing. So the tax court said that the corporation was not formed until the shares were transferred to the IRA. And then once those shares were transferred to the IRA, then the corporation became a disqualified person. And the tax code also said that the dividends that were transferred from the corporation to the IRA did not become income of the IRA until it became subject to the demand of the IRA, which is a very opaque and sort of novel argument that the tax court used. The tax court actually referred to a very sort of esoteric portion of the tax code that essentially said it's not income unless it's subject to demand, whatever that might mean, by the IRA or by the shareholder. So Swanson, at least in terms of corporations, said that, when you form a corporation that's majority owned by the IRA and you do it this way, it's fine. There's not a prohibited transaction by sending capital from your IRA account to the corporation account, as long as you do that before you transfer the shares to the IRA. And dividend distributions back to the IRA from a corporation are fine as well. So, you know, the U.S. tax code at least blessed that circular, those circular transactions in relationship to a corporation. The next case, about 13 years later or so, 14, 15 years later, Hellwig versus Commissioner, also involved a corporation. And the setup was similar. The IRS was attacking certain transactions of funds to the corporation and then dividends back to the IRA. It was a little bit different than Swanson, but the general scheme was the same. And the U.S. Tax Court in that case said, you know what, Swanson has already settled this. It's not an issue. So then we go a couple years after that with Ellis versus Commissioner. Now that was an LLC. However, and I think critical to Ellis is that the LLC elected to be taxed as a corporation. So again, I think this is critical because an LLC is obviously not a corporation. And an LLC is set up much differently than a corporation. An LLC has members, it doesn't have shareholders, and it frankly doesn't even have shares. It just has a profit interest or a capital interest that are owned by its member or members. And so the way you go about setting up an LLC is significantly different than the way you go about setting up a corporation. And the way you get money out of an LLC is significantly different than the way you get money, at least in terms of an owner, out of the LLC. So you make capital contributions to the LLC. You don't buy stock or shares in the LLC. And the way you get money out is simply through a distribution. It's not a dividend. That's a critical distinction, because if you're relying on Swanson, Hellwig, and Ellis for support of the notion that an LLC structure has been more or less blessed by the U.S. Tax Court, that simply isn't true in terms of these three cases, which are the three cases addressing the issue of setting up an entity that is majority owned by the IRA. So in Ellis, again, it was an LLC. In fact, it was a Missouri LLC. And again, it elected to be taxed as a corporation. And I think that helped the tax court say, it's pretty much like Swanson. Curiously, the tax court said that an LLC that elects to be taxed as a corporation and that does not have members or membership interest, which is odd statement for the tax court to make, because an LLC always has members. An LLC that elects to be taxed, or I should say no matter how it elects to be taxed, is always an LLC structure as a matter of law. But the tax court, I think, was applying, saying there were no members or membership interests only in terms of tax. The tax consequences of the tax structure. So the court said that such a structure, LLC, that elects to be taxed as a corporation is sufficiently analogous to a corporation without shares or without shareholders, and that an LLC is not created under this scenario until the IRA has transferred funds to the LLC. And again, that's not a statement that an LLC that is not taxed, does not elect to be taxed as a corporation, that the same thing applies. So Ellis should not be seen as blessing LLC structures necessarily. What Ellis did not deal with is the sending of funds back from the LLC to the IRA. And if you remember in Swanson and Hellwig, the tax court said that's fine, it's a dividend distribution, it's not income at the time that it goes back to the IRA, and therefore it's not a prohibited transaction. Well, as I said earlier, when you take money out of an LLC, that's not a dividend distribution. So there are, that issue still remains open, and the issue still remains open. Well, what if my LLC does not elect to be taxed as a corporation? At least in the eyes of the tax court, then I'm going to have members, I'm going to have membership interest, and at least under Missouri law, and probably most states, an LLC is deemed to be formed, when the articles of organization are filed, or at least the date that is stamped on the articles of organization. So you're typically, and in fact the only way to really do it is to file the articles of organization, set up the LLC, and then send the funds to the LLC bank account from the IRA. But at least under state law, that LLC will already have existed as a legal entity and theoretically could be a prohibited transaction. Now, having said all of that, you're probably thinking, well, what's this guy talking about? This is done all the time. There are lots of self-directed IRA LLCs. The IRS seems to leave them alone, and that's all true. These LLCs are set up a lot, and it's very common. And it's true that the IRS has not, at least none that we know of, attacked the structure of how the LLC is set up. And I say we don't know about it because there certainly could be taxpayers out there where the IRS has claimed that either sending funds from the IRA to the LLC bank account or funds back from the LLC bank account to the IRA is a prohibited transaction, and maybe the taxpayer doesn't appeal that, which would be an appeal to the U.S. tax court. And so we don't know about those cases where the IRS is asserting that that's a prohibited transaction and the taxpayer just folds without appealing it. But since there haven't apparently been any appeals since Ellis in 2013, it appears that the IRS is no longer challenging the setup of even an LLC that has not elected to be taxed as a corporation. That's different, though, than stating that the LLC setup structure and sending money back to the IRA is completely legal, because there's frankly no support that closes the door on that issue. So where does that leave us in setting up and thinking about the self-directed IRA LLC? There is risk, as I just explained, potential risk to the IRS challenging the way you have set up the self-directed IRA LLC. There is no specific formula that we as attorneys can follow based on U.S. tax court opinions or statutes that tell us if you take these steps, you will have successfully formed a valid and compliant LLC. So what we have to do instead is look at the three cases especially that I just went through, and we try to form an LLC, a self-directed IRA LLC. And again, this is an LLC that's going to be owned 50% or more by the IRA. And we try to follow the steps as closely as if we were setting up a corporation. So one thing that you should not do is set up your own LLC. that would potentially be deemed as the service provided by you to the IRA. You never want to use your own personal funds to pay for the setup of an LLC that's going to be owned by your IRA, and that includes attorney's fees or fees paid to the Secretary of State for filing the Articles of Organization. You should only use funds from the IRA, which means if you're going to hire an attorney to set up a Self-Directed IRA LLC for you, your attorney will need to provide to you an invoice for his or her fees to do so, and you will then request your administrator to issue a check to the attorney, who will then use those funds to set up the LLC to pay the Secretary of State's fee for doing that, as well as his or her own fee for setting up the LLC. So again, I would suggest that you always use an attorney who is experienced in doing this and understands prohibited transactions, and by no means do it yourself. So an LLC that is owned by an IRA, as I just said, is owned by the IRA. That's the member, okay? And you can be the manager. So as the manager, really you should think of yourself as an investment advisor for the IRA and the LLC, and not do anything beyond that, frankly. You'll want to, obviously, and the whole purpose of having the LLC, or one of the major purposes, is for you to be able to write checks out of the LLC bank account, to sign contracts as the manager on behalf of the LLC. So you're going to be doing those sorts of functions, and I can't tell you as a matter of law whether or not that's okay, but people do it all the time, and it doesn't seem to be an issue with the IRS. But what we need to pay close attention to, as I said, is how we set these up. So you want to delay as long as possible the date on which the LLC is deemed to begin to exist. So, for example, in the operating agreement and subscription agreement is simply a contract between the LLC and the IRA that lay out the terms of the transaction that's going to occur, which is, for example, the LLC is going to sell to the IRA so many shares in the LLC. Now, shares, many of you are probably familiar with the concept of units or shares as they relate to an LLC. That's really just a fiction that's drawn up by attorneys to make it easier to calculate a member's interest in an LLC. But when you're doing this to set up an LLC that's going to be owned by the IRA, you want to set it up in a way that it, again, mimics as best you can a corporation. Of course, corporations have shares, so we want to have our LLC organized as shares, or have shares that it can then issue to the IRA. And the subscription agreement will lay out the terms of the agreement, which is the IRA administrator will sign the subscription agreement. Obviously, they're going to review it and decide whether or not to do that. At the end of the day, it's the discretion of the administrator on whether or not to sign the operating agreement on behalf of your IRA as the member, and whether or not to sign the subscription agreement. But if you can get, well, certainly you're going to need the operating agreement signed. You can get the subscription agreement signed as well. That's good, because it lays out the steps that we are taking before the LLC will be formed. So you want the funds at least expressed within the subscription agreement and the operating agreement. You want both of those to say the funds are going to be transferred from the IRA account to the bank account of the LLC, and then the LLC will issue shares back to the IRA, and at that point the IRA will become a member and not before then, and the LLC will not be formed completely until that occurs. Now, this is kind of like a firewall that you're building with no guarantee that it won't be burned through by the IRS. But if the IRS starts to take a closer look at LLCs owned by IRAs, they're probably going to dig into the LLCs that are structured poorly with obvious errors than an LLC that is structured very closely to the way a corporation is structured. So that's, when we form these, that's our intent, is to mimic as best we can what has been laid out for us in especially Swanson and Hellwig. So another bullet point on this slide is when it comes to forming an LLC, an LLC is required to have a registered agent, which is simply a person or a corporation, at least in the state of Missouri. It has to be a resident person or a resident corporation that receives legal notices, legal summons on behalf of the LLC. Theoretically, under law, you could be the registered agent of your own LLC or even of the LLC owned by the IRA. However, you don't want to do that. For obvious reasons, that could be deemed as providing a service, and probably is providing a service, to the LLC owned by the IRA. You probably do not want to also obtain the EIN for the LLC. You know, leave that to the attorney who's forming the LLC for your IRA. So that is a lot of information, I'm sure, for all of you to grapple with. It's the kind of information I typically don't spend 45 minutes with my clients or prospective clients initially on the phone, but I spend a fair amount of time, probably at least 20 or 30 minutes, with my prospective clients who tell me that they want to have their IRA own an LLC, a Checkbook IRA LLC, and I say that's fine. Here are the things that you need to know about that there is a risk. It appears that simply through the policy of the IRS, the IRS no longer, at least recently, challenging these structures, that chances are fairly good that it'll be left alone, but there's no guarantee of that. So, you know, I'm happy to form LLCs that are self-directed IRA LLCs for my clients, but I give them the caveat that I just gave to all of you, and all of you should be aware of these issues in setting up such an LLC. And my final comment is there's a lot of videos on YouTube. There are actually a few attorneys who have written extensively on these issues who seem to gloss over the things that I've just told you, which are admittedly perhaps on the first pass here difficult to understand, but I'm hoping to at least have given you some insight into things that you should think about before you form an LLC that's owned by your IRA. And I'll turn it back over to Bill with that.
Yeah, Michael, thank you. And we're going to go through the questions now, and and I've already been reading through a little bit. Some of them for me, some of them for Michael. Some of them we'll probably both add our thoughts on. Before I get to the questions, though, I just wanted to get this out of the way. If you do want to move forward with establishing an account and self-directing into whether it's an LLC or directly into real estate or precious metals or whatever it is, it's very straightforward. You open an account. We have an online portal that will enable you to do that in no more than 10 minutes. Then you fund your account. You either transfer money over from an existing IRA, you roll over from a 401k, a 403b, a pension plan, something other than an IRA, or you make an annual contribution. That's how you get money into the account. Those are the only ways to get money into an account. The transfer from an existing IRA versus a rollover from a 401k or some other plan is a little bit of a different process. And then finally, you purchase your investment. And what you're really doing is you're instructing your custodian to purchase the asset that you want to purchase. So if you wanted to invest in an LLC, you would instruct Entrust to make that investment by establishing the LLC, creating the operating agreement, submitting the operating agreement as the investment documents with the IRA listed as the single member, and then we would review that agreement. We would sign the agreement on behalf of the IRA, and then we would fund the LLC account per your instructions. If you're investing in a syndication that's structured as an LLC or a multi-member LLC, there's typically a subscription agreement that's provided. The LLC probably has an operating agreement, but your investment into it would provide a subscription agreement. Again, the subscription agreement we submitted to Entrust in the name of the IRA as the investor. We would review that agreement, and then we would process the transaction on your behalf. So, all right, Q&A. So again, go ahead and type them into the box. We're gonna answer them in order received, and I'm going to put mine and Michael's contact information up here just for future reference. Okay, question number 1. If my IRA is precious metals, do I have to cash these in order to purchase a property? I mean, typically that is, if somebody wants to invest in one thing, they sell the one investment, generate the cash, and then invest something else. If you have an account with, let's say, Merrill Lynch, and you hold Apple stock and you want to buy Google stock, you have to sell the Apple stock and turn around and buy the Google stock. So from a standpoint of if you hold precious metals and you want to buy a property, then yeah, typically you would sell the gold or silver and then turn around and use the cash to buy the property. That being said, I mean, if you had a seller who, or a property seller who wanted your gold instead of cash, I mean, I don't know that we've ever done that. So I'm not sure if you really want to do that. If you had a seller who is willing to take the actual metals that you hold, as opposed to like take the value of the metals, that essentially you ship the gold from the depository that's holding your retirement account directly to the seller or to the escrow company in lieu of cash, I would have to find out if you could do that. I mean, if that's something you want to do and you really want to know, I would suggest sending me an email with follow-up and I can ask, because I've never heard of anybody wanting to do that. Okay, next question. Those of us who have significant assets in IRAs and are required to make annual required minimum distributions, can we distribute a real estate investment to fulfill part of or all of our RMDs? The answer to that is yes. You can take an asset in kind as a distribution to you to meet your required minimum distribution. So you would request us to distribute a percentage or all of the asset to you in kind. We would file a 1099-R with the IRS with you and reporting that we made the distribution to you, and then you would be responsible with working with, if it's a property, changing title on that property to represent that you now hold personal ownership in that property, or if it's an LLC or some other different kind of investment, you would work with the investment company to change title from, let's say you took a 10% of the value of the property as a distribution. Now your IRA would own 90% of the property. You would own 10% because you took 10% as a distribution. So you would take the asset in kind. You're still required to pay taxes on that distribution, but you're not receiving actual cash. You would be receiving an asset in kind. So in short, the answer to that is yes. The long answer was everything I just said. Is the trade-off in doing this to analyze how much of the cash flow will be protected from taxes outside the IRA because of depreciation versus paying a capital gains tax upon the sale of the investment by the sponsor? That sounds like a conversation to have with probably a tax attorney. Maybe Michael has some thoughts on that. I'm going to read that again. Is the trade-off in doing this to analyze how much of the cash flow will be protected from taxes outside the IRA because of depreciation versus paying a capital gains tax upon the sale of the investment by the sponsor? I will say this. Typically the reason why people take an in-kind distribution is because they don't have the cash to take the distribution, and they have to take a distribution. It's a required minimum distribution. If you don't take it, then you have to pay a penalty. And so if they have an asset like a property that, or they have some other asset that either isn't easily liquidated or can't be liquidated, and you are required to take a distribution, then taking an asset in kind provides you the flexibility to still take the distribution and not have to pay a penalty for not taking a distribution. Any analysis beyond that associated with depreciation on a property, et cetera, I don't have any thoughts on that, to be honest with you. That's something that you would want to talk with your own financial advisor, do your own calculation. Really, it's just more around the idea that you're allowed to take a distribution in kind, And if you need to, then this provides you the flexibility to do that. If you want to for other reasons, then you have your own reasons for doing that. And I have no thoughts on that other than we'll process the distribution if you request it. I don't know if Michael, if you want to expand on that at all, if you have any thoughts on that.
Well, just at a very high level, yes, you always want to model out the tax consequences of any transaction. It's kind of a short, very high-level answer or thought about the question. But yeah, there are tax consequences, obviously, to some of what you're investing potentially through the IRA funds, whether it's directly from the IRA or through an IRA LLC. Right.
Next question, do you broker deals, meaning communicate to investor opportunities? We don't broker deals per se, but we do have, and anybody who is an existing client of ours who has logged into their account, you will see what is called Entrust Connect. And if you click on that, it is a list of investment opportunities, largely private placements, private funds, that other Entrust clients have invested in. It's a relatively new thing that we've put up there. That because we had a lot of interest from existing clients in which they are receiving cash, whether it's through rental income or whatever it is, and didn't necessarily want to put it back in the stock market but didn't have any idea what else they necessarily wanted to invest in, were asking us to hook them up with deals, and it's not something we do. But what we did instead is we worked with and provide an opportunity for a number of our referral partners. Essentially, they are our investment sponsors that other Entrust clients, and in some cases quite a number of other Entrust clients, have invested in. And so we created this marketplace of investment opportunities. Before you go scrambling to look at those, please do read the disclosure that states Entrust has done no research or due diligence on these investments. These are simply investments that other Entrust clients have invested in. And that we're providing these out there for your review. If you want to invest in those, please do your own research, contact them, ask for documentation, talk to them, have conversations, do all the research that you need to do, because Entrust has done none of that. We have simply presented a list of investment opportunities that other Entrust clients have invested in. Next question, do you need to be an accredited investor to hold an Entrust account? No, absolutely not. I mean, you can buy real estate. You don't have to be a accredited investor to buy real estate or buy precious metals. The investment sponsor that you want to invest with might require you to be an accredited investor, but you don't certainly need to be accredited in order to hold an account. The investment itself might require you to be, though. Okay, the next two questions I'm going to read together because they kind of ask the same thing. First question is, can a Roth IRA be self-directed? And the next question is it possible to open a Roth IRA and then convert it to a self-directed IRA? So for the question that says, can you convert it to a self-directed IRA? Self-directed is not a type of account. You're not converting a Roth to a self-directed IRA. You have a Roth IRA that you can hold with a traditional brokerage firm and be limited to stocks, bonds, and mutual funds, or you can have a Roth IRA and hold it with a self-directed custodian, which you can then invest in non-publicly traded stuff in alternative assets. It's still a Roth IRA. The only difference is the custodian, like, again, brokerage firms, typically banks and brokerage firms who give you advice and limit you to stocks, bonds, and mutual funds, as opposed to a self-directed custodian like Entrust who does not give you advice and allows you to hold alternative assets like precious metals, private placements, real estate, et cetera, et cetera. So the answer is yes, you can have a Roth IRA with Entrust. You can have a traditional, our accounts that we hold are traditional IRAs, Roth IRAs, SEP IRAs, simple IRAs, individual 401ks, health savings accounts, and Coverdale educational savings accounts. We will hold all of those types of accounts. All of those types of accounts can be self-directed into whatever you want to self-directed into, assuming that you don't violate any of the tax code rules. Next question, would I be allowed to mix my IRA account funds with other capital I have to purchase an investment property? The answer to that is yes. That's called partnering your IRA. And so when you invest in a new property, you are allowed to, or a new investment, you're allowed to partner your IRA with other investors, including anybody that would typically be a disqualified person. The key is it has to be, you have to establish this partnering relationship at the time of investment. So for example, if you want to invest in a property for $500,000 and you have $250,000 in your retirement account and $250,000 in your savings account, then you can establish the purchase of that property or the purchase of an LLC with your IRA being listed as a 50% owner and yourself as a 50% owner, which means that any revenue generated, like rental income, has to be paid to your IRA at 50% and to you at 50%. And any expenses like property taxes, insurance, maintenance, those types of things have to be paid by the IRA at 50% and you at 50%. Again, I use 50-50 just as an example. It could be any percentages that you want. But again, that has to be established at the time of a new investment. If you already have an existing property, your IRA is not allowed to come in as a partner on that property. If your IRA owns a property, you're not allowed to come in later on you or any other disqualified person is not allowed to come in later on an investor in that property because it's already an existing asset. But you can establish a partnering arrangement at the time of investment. Next question, what are the considerations? Okay, so here's one for Michael. What are the considerations in putting an owner-occupied multi-unit property into an LLC or IRA LLC? Before I pass this on, I just will say that, and this is just more terminology, you're not putting the property into an IRA LLC. You are taking cash, you're putting money from the IRA into the LLC, and then the LLC is buying the property. It's going to be the purchaser of the property. So, Michael, if you want to expand on that. Again, what are the considerations in putting an owner-occupied? Oh, actually, you can't put an owner-occupied property into an IRA LLC. If your IRA or an LLC owned by your IRA purchases a property, you as the owner, you as the account holder are not allowed to stay in that property. You're a disqualified person. You can't use that property, and you can't take an existing property that you already own and have your IRA buy it. So I don't know if I stole your thunder on that, Michael. I don't know, if you have anything you want to add to that.
No, I think you're absolutely correct.
Yeah, I mean the wording is, when you're saying owner-occupied is the key. You can't take, I mean, he did say into an LLC or IRA LLC. I don't know if you want to talk about just generally if putting it into like what considerations if you want to take a property and put it into an LLC that's not owned by an IRA. I don't know if you have anything you want to add to that, that thought.
Well, my only thought is it really has nothing to do with our topic today. I mean,
it doesn't. It's not really about IRAs, yeah.
Yeah, I mean, if you own property in your own individual name and you want to form an LLC and transfer title, ownership of that property from you individually to an LLC, you can certainly do that and probably should do that if it's investment property. But you're right,
yeah,
you can't
but
you can't
do it in
your IRA nor an LLC owned by your IRA purchase property that's owned by you.
Correct. Okay, next question. What type of LLC did he say Missouri has that is good for real estate?
Oh, it's a series? So a series, and I actually have not used a series LLC or set up a series LLC that's owned by an IRA. Haven't done that yet. So a series LLC is it's basically you have a holding company with a bunch of LLCs underneath it is sort of the structure. And it's nice because my fee, setup fee through the state is minimal. So the real advantage is cost. So for example, I typically charge a little under $1,000 to set up an LLC, but you can set up as many series within the LLC as you care to have, and you could have 20, for example, series, and each series, as long as the LLC is set up properly, is its own separate legal entity. So if you have 20 properties, you want to put them each into their own separate legal entity for liability segregation, so that if there's claim against one property, it's not going to jeopardize any of the other properties. It's like having multiple LLCs. So if we were going to form 20 separate traditional LLCs, that would be quite expensive to do versus a series LLC, which essentially gives you 20 LLCs for the cost of 2 LLCs. That's in a nutshell what a series is. There are probably only about a dozen states that have series laws. So you can set up a Missouri LLC and then use even a series LLC and use that. Well, let me back up. You can form a Missouri LLC and use that LLC in any state. You just have to register it in the state that you're going to use it. Theoretically, you can do the same thing with the Series LLC. However, you should really only use that Series LLC in another state that has a comparable Series LLC law, because there are risks that we're not going to get into today, but of using your Series LLC in a state that doesn't have a Series LLC law. But theoretically, I suppose you could have an IRA as certainly part owner or even majority owner of a Series LLC. I would suppose. I haven't really thought that through that carefully, but anyway, that's a Series LLC in a nutshell.
Okay, next question says, is the biological daughter of my wife a disqualified person for me? And then I noticed you followed up and said I haven't adopted her. So a list of disqualified persons includes lineal descendants, right? So ancestors and lineal descendants. The son or daughter, the child of someone you've married that you have not adopted would not be considered a disqualified person to you. The next question just simply says, this question was obviously asked during the time you were talking about disqualified persons, and it says disqualified person for what? For setting up an LLC. So there are rules in the tax code that state essentially that your IRA is not allowed to engage in a transaction with a disqualified person, for lack of a better way to sum it up. So the list of disqualified persons essentially are people in which your retirement account is not allowed to do business, I guess. And so, so the disqualified person is simply what we were talking about is simply a list of people in the Internal Revenue Code that specifically state that are not allowed to do certain transactions with your retirement account. And Michael had put up a list of some of those transactions. So for example, your IRA cannot lend money to or borrow from a disqualified person. A disqualified person, if your IRA owns a property, a disqualified person can't ever stay in the property or do sweat equity, do physical work on that property. Your IRA can't buy property from or sell property to a disqualified person. So that was the reason why we were saying, like, these are disqualified persons. You should know who these are before we get into the specifics around an LLC. So you say for setting up an LLC, what Michael's point with this, and I'll let him add to it if he wants to, is that there are certain transactions or certain actions when it comes to the LLC that a disqualified person shouldn't engage in. And again, disqualified persons are you as the account holder, your spouse, your ancestors, so parents, grandparents, great-grandparents, etc., lineal descendants, children, grandchildren, great-grandchildren, etc., and spouses of lineal descendants. Those are the family ones. And then there are certain other, depending upon ownership of company and things like that. So that was the reason why we had that slide around the disqualified persons. Michael, anything you want to add to that?
No, I think you've covered. I mean, again, the notion of a prohibited transaction is very relevant to setting up any sort of entity that's going to be owned by your IRA. So you just need to be aware of what a prohibited transaction consists of. And of course, prohibited transactions are committed by disqualified persons. And so that's the link between prohibited transaction, disqualified persons, and an LLC or any other entity that's going to be owned by the IRA. As I said at the beginning of the presentation, you have to be concerned not only about prohibited transactions that occur after the LLC, for example, is set up, but you also need to understand that a prohibited transaction, or the IRS could deem a prohibited transaction to occur in the process of setting up the LLC. So that's kind of the link or the relationship between prohibited transactions and the LLC that I was talking about.
Okay, next question. While not listed, I assume siblings and parents are disqualified too. Siblings are not considered disqualified persons. Parents are. Next question. If you own multiple properties, should each be its own LLC for liability protection? Michael,
so
that one's
really up, so that's really up to your risk tolerance. Ideally, the best practice would be for, unless the property is just not worth that much, for each property to have its own LLC, or if you're in a state with the series LLC, for each property to be plugged into an individual series. And the reason for that is, as I said earlier, if somebody has a claim in relationship to that property, and they're going to sue whoever owns that property, whether it's you individually or an LLC. If the LLC owns multiple properties, but just one of them is the subject of the lawsuit, let's say a slip and fall, and that person gets a judgment against the LLC, that person can seize any or all of the assets that are owned by that LLC. So what you really have to figure out as a real estate investor is, if you have multiple properties, how much are you comfortable putting at risk inside an individual LLC? Maybe it's $100,000, maybe it's $50,000, maybe it's $1 million. And you reach a certain point where that bucket is filled and you want to create a new bucket, which is a new LLC. So if somebody gets a judgment against LLC A, they're not generally going to be able to seize the assets that are owned in LLC B. So when I say it's a balance between your willingness and ability to administratively manage multiple LLCs versus a single LLC. So I have a lot of clients who, I have a lot of properties, and I say, look, you need to separate these into separate LLCs or into a series LLC. And they say, I don't want to have to mess with multiple bank accounts, multiple EINs, multiple tax returns, and all those sorts of things. And so for them, they're fine with having the majority of their assets at risk. Others are more risk averse, and they'll want to spread the risk across multiple LLCs. So that's just a business decision that you need to make in terms of your risk tolerance and how many properties or the value of the properties that are owned by an LLC.
Okay, next question. Under litigation, doesn't it seem like the IRA would be protected from claims against the LLC in the same way as any LLC owner would be protected, right? It was kind of, we talked about this a little bit yesterday, Michael, as far as the IRA itself having liability protection. But again, under litigation, doesn't it seem like the IRA would be protected from claims against the LLC in the same way as an LLC owner would be protected, right?
It certainly should. You would certainly think so. But as I said when I was talking about that topic, I haven't found any cases where that scenario has arisen and the court entered an opinion as to whether or not the IRA is protected. Now, as I think I also said, or maybe I didn't, any LLC is subject to a risk of piercing the LLC veil. Now, it's sort of difficult to do, but under certain circumstances, especially when there's fraud that's alleged or proven, you can actually pierce a corporate veil, pierce an LLC veil, which means the LLC essentially goes away, and you no longer have the protection of the LLC. And now the owner or owners of the LLC can, there can be a judgment entered against them as well. So if that occurred with property owned by IRA LLC and that LLC was pierced, then the judgment, or the person who's doing the suing, could also get a judgment against the IRA. But again, that's kind of rare and not likely to happen, but it certainly could. So yeah, I mean, none of this is, asset protection generally is never 100% safe or a certainty. And so what you do are you build firewalls to make it difficult for people to get to other assets. Okay, next question. You may be answering this later, but I have already purchased a property through the IRA or am currently in escrow. May I establish an LLC and transfer the asset into the LLC, or is it too late to take advantage of the Self-Directed IRA LLC protections for this property? You can certainly buy a property or be in escrow or be in the process of using your IRA to buy a property and decide you'd rather have it in an LLC, and decide that you want to re-register that asset to being owned but directly by your IRA into being owned by the LLC. I mean, that you can do that. People have done that where they bought a property and where the title is held directly by the retirement account. When you use your retirement account, title is held by
the Entrust Group FBO for benefit of your name and account number. It's held directly by the IRA. You can establish an IRA, name your LLC, or I'm sorry, establish an LLC, name the IRA as the member of the LLC, and typically people fund that LLC through putting cash in the account, and then now they have checkbook control and can write checks from the LLC to go buy the property or whatever. But you can fund that LLC with an asset, with a property is essentially what you would be doing there. So in short, the answer is yeah, you can do that. It would require, you know, changing title on the property from the IRA to the LLC. There's going to be some paperwork and work that you'd have to do or have somebody do for you to re-register and change title on that, but you can do that. Michael, you got anything you want to add to that?
Well, I would be a little cautious about doing that. One of the things that I did not get into in my portion of the presentation was the flow back and forth between the IRA and to the LLC bank account, or to the LLC and then back to the IRA. I certainly talked about that in terms of initially setting up the LLC, and we have these cases that I went through where, again, the issue was, when did the corporation come into existence? Because a corporation that is owned 50% or more by your IRA becomes a disqualified person at a certain point. Okay, when your IRA owns 50% or more, it's going to become a disqualified person. What those cases said is the corporation did not become an entity, a legal entity, until after the shares were issued to the IRA. After the shares are issued to the IRA, then the corporation became a disqualified person. So the question would be, if you make subsequent distributions, and again, this probably happens all the time, if you make subsequent distributions from your IRA to the corporation or to the LLC, is that a prohibited transaction? And the answer is possibly. Because again, now this corporation or the LLC is a disqualified person, and you have a transaction between your IRA and a disqualified person. So again, you know, my job is to interpret the law, and you know, there is no law that I have found that says, yeah, you can do multiple distributions from an IRA to an IRA LLC or an IRA corporation. So certainly in the context of a corporation, you can do it one time as long as you do it properly. You can make a one-time distribution from your IRA to the corporation, and then the corporation is going to spring into life and it becomes a disqualified person. Can you then send more money from your IRA to that corporation? I would be hesitant to do that. Can you transfer title from the IRA? The IRA owns real estate. Can you transfer title in that property to that corporation that is now a disqualified person? I would be leery to do that. And the same thing would apply to an LLC, which is even a little bit more risky because, again, the courts have never dealt with, the tax courts haven't dealt with a pure LLC that's a pass-through entity that's not taxed as a corporation in the setup. So we don't know exactly when that LLC springs into life, but when it does, it's a disqualified person. So, you know, you just need to kind of think through, and the same thing occurs on the reverse. You know, certainly a corporation can, because of Swanson, make multiple dividend distributions back to the IRA. Does the same thing hold true for an LLC? We don't know. There's not a tax court case that addresses that issue.
Okay. Next question. If the Self-Directed IRA LLC does not have unrelated business income, does the LLC have to file an income tax return? Michael, you want to step in with that one?
No is the short answer, and I don't think the LLC is the one to file the tax return anyway. If you're talking about Form T990.
I-90T, yeah. I mean, when there's UBIT due, the account holder, the way we work it is, you're right. We would file that form, but the account holder needs to complete it and calculate it and then send it to us, and then we file it on behalf of the IRA. From a standpoint of, just generally LLCs and single-member LLCs, is there a tax form that needs to be filed? I actually don't know the answer to that. Like that would be, for me, when somebody asks me that, I tell them to talk to a CPA. Because it shouldn't be subject to tax, but that doesn't necessarily mean a form doesn't have to be filed. So that would be my only comment, is there might be a form that needs to be filed, but it shouldn't be subject to tax because the LLC is owned by an IRA, and therefore it's essentially a disregarded entity.
Yeah, I think so, and I'm not going to give tax advice either, but and the question should be posed to a CPA that's familiar with
to a CPA,
yep, for example. But
yeah, or just LLCs.
So yeah, at any rate, the tax would be, if the income or gain is tax exempt, then generally I don't think you would have to file a tax return. But if it's not tax exempt, then you would have to file 990T through the IRA.
For UBIT, yeah. I guess, for me, tax return versus is there some form to be filed? There might be, there might be a form. You shouldn't have to, I'm probably playing around with the language a little bit when I differentiate between a tax return versus some form that you have to, file. But again, talk to a CPA about that. Next question, can you lend money from a self-directed IRA as long as it meets the guidelines of disqualified persons? Yes, your IRA can lend money to non-disqualified third parties. We have quite a few people who do that, as a matter of fact. Does Entrust have or offer a process, workflow, or guides to avoid any of these legal issues? We do not. We are a custodian and record keeper for self-directed retirement accounts. We do not provide advice. That would be advice. Next question. Couldn't the IRA be co-owned by more than 2 self-directed IRAs? That would get past the more than 50. Couldn't the LLC be co-owned by more than 2 self-directed IRAs? Yes. You can establish an LLC and have more than one IRA be a member of that LLC. If the 2 IRAs are individuals that are disqualified persons to each other, then again, that establishment of that LLC and the membership needs to be structured at the time that you establish the LLC. So if you have an IRA that invested in an LLC and you decide you want to add your spouse's IRA to that LLC at a later time, that would be considered a prohibited transaction. However, if you want to partner your 2 IRAs, you and your spouse on an IRA, on a new investment, on a new LLC, then that's allowed. That's called partnering your IRA. Next question. Do you see any issue with paying the IRA admin fees with personal funds? No, not at all. You're allowed to do that. As a matter of fact, up until the most recent tax code changes, you were allowed to deduct those as under miscellaneous expenses. But our fees, the Entrust fees, you're allowed to pay from your personal funds. What you're not allowed to pay from your personal funds is any fees for any assets held inside the account. So if you have an LLC that has annual fees that need to be paid to the state, the LLC or the IRA through the LLC has to pay those. You can't pay those from personal funds unless you are a partner in that LLC and you need to add additional funding, and that gets into a whole other thing. But again, our Entrust fees you can pay from your personal funds. Next question, if you're buying real estate with your self-directed IRA, is debt not allowed? Investment should be all equity. Your IRA is allowed to borrow money. There are financial institutions that will lend money to your retirement account to purchase real estate. So the account borrows the money, the account buys the property, the account pays the mortgage back, right? Everything is done in the name of the retirement account. Or to be consistent with our presentation here, an LLC owned by your IRA. The LLC would buy the property, the LLC would borrow the money, the LLC would pay the loan back. Everything. There are financial institutions that will do that. It has to be a non-recourse loan, which means that the only recourse that the lender can have in the loan documents is the asset itself, the property itself. They can't, you can't have any personal guarantees or use any other collateral other than the asset itself. But again, you don't have to pay all cash. There are financial institutions that will lend your IRA money to buy property. Is a subscription agreement, I don't understand this question. Is a subscription, oh, here we go. I'm sorry, I sort of mixed two questions together. I'm reading this. Is a subscription agreement required for a single member IRA LLC?
It is not, no.
Yeah, we typically get an operating agreement.
Yeah, but I typically include it, again, because what I'm trying to do is mimic the setup of a corporation. So you want to lay out in a subscription agreement and in the operating agreement to a certain extent the procedure that's going to be used in establishing and setting up the LLC. I mean, and what you're doing is creating documentation that if the IRS reviews the setup, you know, it states right there in the subscription agreement how it was done and how the parties to that transaction agreed on when the LLC would be formed, when it would be legally effective and a legal entity. It doesn't mean that that in fact is the case. So, you know, you just try to mesh all of this together so that it, when the IRS reviews it, it looks to the IRS very much like Swanson, even though it's an LLC. So that's why I use a subscription agreement. It's not legally necessary at all. Yeah, so that's,
okay.
It's just a private contract anyway between the parties.
Yeah. We typically, I mean, most times we're just getting an operating agreement where it's listing the IRA as a member. Next question, why not use a sub-S to avoid corp taxes and the vagaries of an LLC? I'll answer that question. There are three types of assets an IRA is not allowed to invest in: collectibles, life insurance, and S corporations. So the simple answer is that that is an asset that the IRS specifically prohibits an IRA from investing in. You're not allowed to invest in an S corporation. So that's why it needs to be structured as some other corporate entity other than an S corporation. Next question was simply, what the hell are we allowed to do? I'm guessing that that question may have been asked before you got to your last page where you actually talked about like what the structure of an LLC would be. So I don't really have an answer beyond. I'm just assuming the presentation eventually answered your question. Next question, can Entrust act as the registered agent for the LLC? No, we do not do that. We, again, are custodians and record keepers only. We don't play any role in the management of an asset or the setting up of an asset or the creating of the documentation or providing advice or input as to how to go about establishing that asset. That is, again, these are self-directed retirement accounts. It is expected that you as the account holder are doing your own research and due diligence and working with qualified people to provide all those rules that are required. So yeah, no, we can't do that. The LLC owns the IRA. How is it funded? What are the funding restrictions? An LLC doesn't own an IRA. An IRA owns the LLC. So you kind of have that backwards. It would be funded from the IRA. You would transfer money from you would fund your IRA and then transfer money from your IRA to the LLC. And what are the funding restrictions? In terms of funding an IRA, you have contribution limits. You can't exceed contribution limits in a year. If you have a 401k for a company you work for, you're typically not going to be able to transfer those over or roll those over to an IRA. There are certain restrictions from that standpoint. Funding restrictions into the LLC is going to be restricted to the members of the LLC. So if you establish a single member LLC with your IRA as the member, then the funding of that LLC is only allowed to come from the IRA. You can't add additional funding from your personal savings because you are a disqualified person. Next question, can my existing IRA, Roth, or traditional fund the LLC IRA? Yes, you can. That's sort of the whole point of this presentation is how to go about doing that. Next question, sounds like as the owner of the IRA, you are not allowed to perform any work, maintenance, etc. on that property, and the IRA has to pay for all those potential expenses. That is exactly right. If whether you go through an IRA or whether you go through an LLC or do it directly from your IRA, you along with your spouse and other disqualified persons are allowed to perform any work, maintenance, etc. on that property, and any expenses for that property has to be paid from the IRA or the LLC that is owned by your IRA. Next question, is Missouri the only state we can do this in? Can we have our investments anywhere? I mean, I'll answer that question. No, Missouri is not the only state. You can establish LLCs in any state that you want. And can you have your investments anywhere? Yes, you are. You are allowed to invest your IRA as long as you don't do any prohibited transactions and you don't try to invest in an asset like a S corporation or a collectible. You can invest anywhere. Now, if by anywhere you mean anywhere in the world, like can you buy real estate in other parts of the world? Again, the answer to that is yes. But note that to invest in certain countries, you oftentimes have to establish an entity in those countries. So the IRA or even an LLC established in the United States might not be allowed to invest in those countries, but that depends upon the country you want to invest and what their specific rules are in. Michael, if you have anything you want to add to any of these, just feel free to jump in, but the ones I feel like I can answer, I'm just kind of blowing through them.
Yeah, that's fine.
Can my IRA LLC loan money to another small business? I mean, the answer to that is for me is yes, as long as the small business is not considered a disqualified person to you and your IRA. So for example, if the small business is your own business, then the answer to that is no. Your IRA can't loan money to your own business or your spouse's business or your parent's business because those are all disqualified persons to your IRA. But on a general, can an IRA LLC loan money to another small business? Sure. You just have to the structure of that loan can't create a prohibited transaction. How do you add an additional member with personal funds? Well, if your IRA already owns an LLC or already holds title or membership of an LLC, then you can't. You're not allowed to add yourself as an additional member. You can't add personal member. If there's an LLC out there that, let's say you have a friend who has an LLC or has an IRA that holds an LLC and they want to add you want to add yourself as a personal member, then you just would amend the operating agreement, probably create it in Michael's case, use a subscription agreement, and add yourself as a member to that LLC. But again, you can't add yourself to an IRA-held LLC. You can't add yourself when it already exists because you're a disqualified person. You would have to establish yourself as a partner member on that LLC at the time that you create the LLC and fund that LLC along with your IRA. What is the initial cost and ongoing cost of the LLC? I mean, that's going to depend upon the state and maybe who you use to set up the LLC. I mean, Michael, you want to add to that? Different states have different annual fees that have to cost to have an LLC. If you're asking the Entrust fees, I mean, our fees are all located on our website. I would encourage you to go there and just click on fees at the top of the screen and look at those. But from an LLC standpoint, and there are costs to having an LLC, but that's going to be state specific. Next question, can we open a new IRA, Roth, or otherwise direct through your portal? Yes. The answer to that is yes. Is a brother or sister considered a disqualified person? No. Siblings are not considered disqualified persons. What is the cost of Entrust custodial services? There it is. I always get that question. Please go to our website. We have our fees in detail on our website. Just go to theentrustgroup.com and click on fees at the top of the screen, and we have a detailed list of all of our fees. My second question is that can an investor roll over his or her thrift savings plan, TSP, into a self-directed IRA? The answer to that is yes, as long as the thrift savings plan that you are part of doesn't restrict you in any way to do that. So if you're still working for the organization in which you have the TSP or anything like that, there might be some restriction on you being able to do that. But as long as the plan itself, and this also applies to 401k plans or 403bs or pension plans for that matter. If you work for a company that has a 401k or a 403b, an organization, and you want to roll it over into a self-directed IRA, once you leave those organizations, you can do that. If you're still a worker or part of those organizations, then you'd have to talk to the plan provider to see if they allow for it. They often do not allow for it. So same thing with your TSP. Just look, if you're no longer part of the organization that offered the plan, then you should be able to roll over. You would be able to roll that over to an IRA. But if you're still part of it, then talk to your benefits administrator, your plan provider. Next question. I filed Form 5500EZ on July last year through mail, and by mistake I wrote the LLC EIN number when I should have wrote the EIN number for the 401k plan. I realized this mistake today. What can I do to fix this mistake? I actually don't know the answer to that question. Talk to a CPA, and they should be able to help you fix that. So there's a follow-up to the question about loaning to a small business. This small business is another non-IRA LLC. Again, not to repeat my previous answer, but as long as that small business is not a disqualified person to you and your IRA, so essentially the small business can't be yours or your spouse's or any other disqualified person, then your IRA can loan to that investment, to that entity. Next question, could I go in one half on a property using my self-directed IRA LLC for my half down pay and have a qualified person to use non-qualified funds to make the other half of the down pay, or is that a lender question? I mean, that is kind of a lender question. It's largely a lender question. The issue that you're looking at is you're saying for a down payment, and then who is the lender going to lend to, right? So if you're going on if you're going in half of a property, and you're going on half the down, essentially if you're using your IRA, you can't just go half on a down payment. Your IRA has to become half a member of that, or half an owner of that property. And if your IRA is half an owner on that property, then the lender can't lend just to the other person. They're gonna want to, because in theory, the lender can't foreclose on the whole entire property if your IRA is a half an owner on that property, right? I don't know if that makes sense, but ultimately, yeah, talk to the lender about that. Explain what you want to do and find out if they're willing to lend. But the chances are you're not going to be able to get them to be able to do that. You probably have to create a single entity like an LLC, have your IRA partner in that LLC with the other party, and then have the LLC borrow the money, and then everything is structured through that one entity. If my self-directed IRA invests in a real estate LLC as a 35% member, can my self-directed IRA also lend the LLC money as a note in second position? I'm going to read that again. If my self-directed IRA invests in a real estate LLC, so I invest in an LLC as a 35% member, can my self-directed IRA also lend LLC money as a note in second position? But my answer to that would be no. Your IRA can't lend to an LLC in which you're a 35% member. Michael, you got any? You want to expand on that at all? You got any different thoughts?
I don't.
Yeah, that's a prohibited transaction. Sorry. What was the third most recent tax case that was shown on the previous slide?
That was Ellis versus the Commissioner of Internal Revenue, and that was decided by the U.S. Tax Court in 2013. Okay.
Paul, if that's all you needed to know, what was the name of it again? If you have any more, need specifics, there's Michael's contact info. Self-directed IRA LLC versus solo 401k, differences, advantages. Well, you're comparing apples to oranges. An IRA that then invests in an LLC, an IRA is different than a 401k. A 401k has higher contribution limits. It has certain flexibility that an IRA doesn't have, like you can borrow from a 401k. With a 401k, first of all, to have a 401k, you have to be self-employed or have your own business. To have an IRA, you don't have to be self-employed. Anybody can have an IRA. To contribute to an IRA versus a 401k has difference. The one thing with a 401k, though, that you don't have with an IRA is that with a 401k, You are, as trustee of, as the business owner and trustee of the 401k, allows you to essentially, we have what's called a document-only option where we provide you the 401k plan documents, and you can go open your own 401k bank account and be the record keeper of your 401k plan. Whereas with an IRA, the custodian, Entrust, has to be the record keeper of the account. And how you get checkbook control is by transferring money into an LLC, and then you are funding an LLC as an investment. Now you have checkbook control, whereas with a 401k, as the trustee and business owner you are the trustee of the 401k plan as the business owner, you can have your own checkbook control by simply requesting Entrust to provide you the document only and saying, I'm going to do my own record keeping, thanks for the documents, I don't need you to do the record keeping for me. With an IRA, you have to establish an LLC in order to do that. Next question, can Entrust set up the LLC? No, that's not a service we provide, sorry. We have a list of contacts, including Michael, that you can contact if you need help setting up the LLC, but I'm sorry, it's not a service we provide. What is the fee structure, or how is the fee structure of the custodian handled? We charge, all custodians charge, have different sets of fees. We have transaction and record keeping fees. If you go to our website, theentrustgroup.com, and click on fees at the top of the page, you'll see a detailed listing of our fees. What is UBTI and UDFI? Okay, unrelated business taxable income and unrelated debt financed income tax are kind of opposite sides of the same coin. Essentially what that means is for UBTI, if you are using, or UDFI, if you are either using leverage to purchase an asset, or if your account is in effect running a business, then it is an expense. It is a tax that your account is required to pay. That's in short the answer to that question. Michael, do you have anything you want to add to that as far as explaining that?
Yeah, I think it's there are only certain types of investment income that is tax exempt, and everything else incurs a tax, and so that would generally be UBTI. And UDFI is income derived from property purchase through debt financing, is kind of the short answer, which I think is probably what you said. Yeah, that's the gist of it. You could follow up with me if you want a little more. I can go into some explanation. But the meeting's starting to run long, so that's why I'm kind of trying to push these along a little bit. Follow-up to the TSP question doesn't change my answer to that. Please talk about adding funds after initial formation. I'm going to let Michael expand on this a little bit, but my answer to this is if an LLC needs additional funding, then any additional funding has to come from the members of that LLC proportionate to the percentage ownership. So if you want to add additional funds, well, this isn't even additional funds. Please talk about adding funds after initial formation. For an IRA LLC, you instruct Entrust. You would submit to us the operating agreement and or subscription agreement, operating agreement and the subscription agreement, or just the operating agreement, with the IRA listed as a member, and then instructing Entrust to fund that LLC from your retirement account. Right? So the IRA gets named as the member, and then you instruct the custodian to purchase the shares or ownership, not shares, but the ownership percentage membership into that LLC. So if it's a single member LLC, the IRA would fund it for 100%. If it's a multi-member LLC in which an IRA is just one of many other members, then the IRA would fund that investment per the subscription agreement of the LLC, requesting, like, if it's going to be 1% ownership in a $100,000 LLC, then the IRA would fund it with $1,000, just to make the math easy. What about a checkbook control account where you have control to move more quickly? Is this more risky that would trigger the IRS? Does Entrust offer the checkbook control portion? Okay, so pretty much this whole presentation is about obtaining checkbook control by establishing an LLC. That's how you get checkbook control. Whether it's more risky that would trigger an IRS audit, I want Michael to chime in on this, but I've not necessarily seen indications of that
whether that's actually true that it does or not, again, I haven't seen any specific indication. That being said, if somebody got audited because they hold a single member LLC within their IRA, I don't know that I would necessarily be aware of it either. I haven't had any conversation with somebody that reached out to me that's my existing client and said, hey, I'm freaking out here because this is what's happening. Michael, what are your thoughts on that? Would you consider it more risky that would trigger the IRS?
Potentially could. You know, the IRS is able to link up the LLC with the IRA, so you know, it's certainly possible. But frankly, you know, the IRS has added a few years ago to the 1099 that's filed by the custodian, requires self-directed IRA or any IRA owner or IRA custodian or administrator to disclose to the IRS the type of investments that you are investing with or through your IRA. And one of the categories is real estate. And I think the reason the IRS added those few boxes to the 1099 that's filed with the IRS each year is to be able to identify, you know, certain types of investments that are more prone to prohibited transactions. So, you know, I think that I don't have any information about whether the LLC would invite more scrutiny, but certainly if the IRS does an audit or a review, you know, they're going to take a look at what's occurred through, you know, both setting up the LLC as well as the operation of the LLC.
All right, next question for you. Says, what is the turnkey budget for setting up a self-directed IRA LLC? Just on a general sense, we tend for speakers, that people that we bring in, we don't typically they don't sell their services per se. Michael, I don't know if you have a range, like if you want to give like a range, it can be anywhere from this to this, and then maybe we'll just move on at that point.
Yeah, I think most attorneys are right around $1,000 to set this up.
Yeah, I would agree with that. What is your advice on buying an existing LLC owned by a third party which only owns real estate? Would that be better is in quotes, than buying the real estate from the LLC into a newly created self-directed IRA? What is your advice on buying an existing LLC owned by a third party which only owns real estate? Would that be better than buying the real estate from the LLC into a newly created? I think it's 6 of one, half dozen of the other, to be honest with you. It depends upon whether you want to own the IRA directly or own the property directly in your IRA or own the LLC. I don't know, do you see any legal issues, Michael, between, you know, if somebody's got an LLC that owns real estate and versus buying the real estate out of the LLC or just buying the LLC in whole?
I've never done that, but you still need to think through. I mean, your IRA can certainly buy into an LLC or buy a membership interest in an LLC, even an existing LLC. It's going to become, however, if you're buying 50% or more of it, then that LLC is going to become a disqualified person. So, you know, you just need to be aware of that as you are kind of thinking through the steps of that transaction.
Yeah, I think in the question, it's essentially an LLC owns a piece of property and wants the IRA to buy either the whole entire LLC in whole or buy the IRA from the LLC, so the cash goes to the LLC. So either they're transferring title on the LLC or they're transferring title on the property, one or the other, or transferring membership in whole of the LLC or transferring, you know, title on the property or ownership to the LLC, to the IRA.
The answer would vary significantly based on exactly how you are suggesting to do it. You know, if you're suggesting to transfer ownership of the property to the IRA versus the IRA purchasing the LLC, I mean, those are two vastly different types of transactions. So, you know,
yeah, he wants advice. I mean, I couldn't give advice. I mean, whether one's better versus the other.
Yeah, I mean, I would have to spend time going through each step of that transaction in order to provide any advice on that.
Yeah. Next question is, me and my wife own a property 50-50 in a self-directed IRA. It's in a trust. It's in a trust account, but we were told by an accountant that we couldn't put the trust property into an LLC or there was no benefit. Thoughts? So some of the wording on here I'm struggling with. So when you say you and your wife own a property 50-50, so your IRA and your wife's IRA owns a property 50-50 is how I'm going to interpret it. It's in a trust account. So maybe you named your trust account as the beneficiary of the IRA, but there is no such thing as an IRA being in a trust account. The IRA is, in fact, a trust on its own. It's a type of trust on its own. So you couldn't put the trust property into an LLC or there was no benefit. Thoughts? I don't have any thoughts. I would say take your accountant's advice. I don't know, Michael, if you have anything you want to expand on that. I think I'm struggling a little bit with the way he worded stuff.
Yeah, I'm not quite clear enough on the facts to be able to comment.
Yeah. Do I understand that the fees associated with forming the LLC inside an IRA needs to be paid from funds within the IRA? You do understand that correctly. They should be paid by the IRA. And then once the LLC is funded, they can be paid by the LLC itself because that's IRA money inside the LLC. Next question is a personal question. Do both of you have self-directed IRA? I have a self-directed traditional IRA. I have a self-directed Roth IRA. I have a self-directed health savings account. I also have a 401k with Entrust that I'm self-directed. I have 4. So, Michael, I don't know if you want to answer that or not, but yeah, I'm a big fan of self-directed retirement accounts personally.
I'll just say that I do have at least one IRA, but decisions should not be based on what I do. So, I appreciate the question. I understand why you're asking, but why I do something could be significantly different than why you would want to do something. And what makes sense for me doesn't make sense for you. And so I don't think what I do, personal investing, should drive or influence what decisions you make.
Next question, how much extra protection do you get by having an independent manager?
Oh, yeah. Well, so a disqualified person is, if the IRA owns 50% or more of the LLC, then generally the manager is also or could also be a disqualified person, at least under the corporate model. And that's not going to change whether it's you or somebody else. So it's just something to think about as you're putting it together. I don't think it's. I mean, look, once you have the LLC up and running, if you've gotten through the formation, sending money to the LLC, getting money back to the IRA, your focus at that point should be on what sort of decisions you're making, whether it's you or somebody else who's managing. That person should really just be making investment decisions and not undertaking any activity on behalf of the LLC beyond that.
Yeah, and that's kind of what we typically talk about is that, the manager is essentially making the investment decision, is the one writing the checks, right? You're the one that has checkbook control, which can be you. You just can't compensate yourself, right? So you can't have anything in the operating agreement that says you're going to be compensated or receive any expense reimbursement for being the manager of your LLC. That's the key thing is just if you're gonna the manager makes the investment decisions, writes the checks. Don't pay yourself. Don't have anything in there that says you're going to get compensated for that. Next question: can multiple self-directed IRA accounts own the Checkbook IRA LLC, such as Roth IRA, HSA, and traditional IRA accounts in self-directed custodian? Yes, you can partner multiple IRAs into one LLC. Next question, I'm over age 59.5 and my IRA LLC has invested in real estate. Can the monthly rental income be distributed to me personally on a monthly basis? The money has to flow from your IRA back to the LLC and then, I have that backwards. The rental income has to flow from the LLC back to the IRA, and then you can take the distribution from the IRA. You can't take the distribution, the income, directly from the LLC. It has to come back to the IRA, and then you take it from the IRA. And by the way, the 59.5 thing is, at age 59.5, you're no longer subject to a 10% penalty, right? You're still going to be taxed, but you're no longer subject to a 10% penalty. You're allowed to take a distribution from your IRA anytime you want. Just after 59.5 is when you're no longer subject to a penalty. Next question, can my self-directed IRA partner with a disqualified individual, including myself, at the initial purchase of a property? Yes, you can. Custodian administration fees, that's probably a follow-up to another one. Again, our fees are on our website. Please go there. What are the tax implications of using my self-directed IRA to distribute money to my LLC in order to use as a down payment on a home purchase? What are the tax implications am I using to distribute money? Well, again, I'm going to change wording a little bit here. You're not distributing money to your LLC. It's not a distribution. Your IRA is purchasing membership or ownership percentage into that LLC. So it becomes a member, whether at 100% or 20% or whatever it is, it becomes a member of that LLC. And then the LLC would put the down payment, and then the LLC would buy the property. Everything is structured through the LLC with your IRA as a member of that LLC. So from a tax implication standpoint, I mean, according to our understanding and the three cases that Michael talked about earlier, your IRA is allowed to be a member and invest into an LLC, and then that LLC can be used as essentially a pass-through entity for making investment purposes. And as long as the money flows from the LLC back to the members at the proportional percentage of ownership in that LLC, your only tax implication, unless there's UBIT, well, if you're using a down payment and you're going to use borrowed money, there's going to be unrelated debt financed income tax. So you're going to be subject to UDFI. So there will be, it's more of an expense. Just like property tax is an expense or maintenance is an expense, UDFI becomes an expense that your account has to pay to you because a portion of the money that was used to buy that property is considered non-IRA money, and so any revenue generated from the non-IRA portion of that has to be borne and paid by your retirement account. Again, Michael, if there's anything you want to add to that.
No, not really.
Okay. What is the fund size that is big enough for LLC setup? What is the typical fee to set up an LLC? Fund size, it's up to you. There isn't, you don't have to have any particular fund size. And then the fee structure, you're going to have custodial fees. You're also going to have a fee that whoever you use to set up your LLC that's going to charge you, and that can vary depending upon who you use to set up and establish your LLC. Next question, distribution of a portion of real estate requires an appraisal each time. That is correct. 10% equals 10 appraisals, quite an additional expense. Well, 10%, if you're taking in 10% each year, Entrust requires an appraisal plus a real estate FMV each time. You are correct. If you want to take a distribution from your retirement account. Now, if your distribution that you want to take, let's say you want to take 10% today and then you want to take another 10% 2 months from now, we're not going to require another appraisal. I don't know the exact time frame in which we would require additional appraisal. I think that maybe if it's less than a year, we'll use the same appraisal. I'd have to talk to internally some departments about that. But I mean, in short, the answer to that is that if you want to take a distribution, then we do require an actual appraisal. Again, assuming the distribution, the last time you had an appraisal done was beyond a specific time frame. And I'm sorry, I don't know what that specific time frame is. Next question, can you roll money out of a government TSP like a 401k to a self-directed IRA? Yeah, I answered this question earlier. You can, as long as you aren't beholden to that plan because you still work for them and they have restrictions of being able to do that. To establish the partner arrangement to invest, will personal property trust work? I got to admit, I don't know a lot about personal property trusts. So Yeah. I don't know how to answer that question because I don't know the answer to this question. I don't know a lot about personal property trust. I think your IRA can invest in different, like there are land trusts that I know that people have used their IRA to invest in. We typically see LLC as a structure, but I'm sorry, I don't know a lot about personal property trust. Do you, Michael? Do you know anything about that? Do you want to chime in on anything with that?
Yeah, I'm not quite clear on what the question is, but
I think instead of using an LLC, using a personal property trust is the entity in which the IRA is going to be a partner on investing in.
Yeah, I've never set that up, or set up a trust for the purpose of the IRA then purchasing. I mean, so I'm not sure how that would work, frankly. I mean, what are you purchasing?
Yeah. 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 I don't know. I don't think we're going to be able to answer that question. Next question, can I make improvements to a self-directed IRA-owned property by adding a right-of-way to the self-directed IRA-owned property using self-directed IRA cash? If you want to make improvements to the property, any cost of that has to be borne by the IRA. So the answer to this question is yes, you can. And not only can you do it using your self-directed IRA cash, you have to use it using self-directed IRA cash. That's required. Once the LLC is established, can the percentage of ownership change between the owners? I.e., if two IRAs are co-owners of an LLC, can one purchase shares from the other? The answer to that is yes, as long as the co-owners are not disqualified persons to each other. So if it's you and your spouse that are co-owners, then the answer to that is no, you can't change percentage. If it's you and a friend in your IRA and your friend's IRA, then yes, you can purchase from each other. Does the LLC have to file a tax return at the state level? I don't know. Michael, you know the answer to that? That would be another accountant question.
So an LLC as a pass-through entity, all of the income and gain goes onto your personal tax return, and the state return is derived from your personal return. So there are tax schedules and tax returns that, again, it depends on how your LLC is taxed. For example, if it's a partnership, it's going to fill out a 1065, and then the income and gain from that is going to be reported on your personal tax report. So the short answer is no, it doesn't file anything separate with the state. You obviously have to file your personal return with the state, and you declare the income from the LLC on the state, but that's different. I mean, that's not really what, that context is not within the IRA context. If the LLC, if an LLC owned by an IRA generates net income, net gain that's taxable, that's going to be reported through the 990T from your IRA or by your IRA. So your IRA is going to be liable for that tax, not you individually. But I don't know if the...
okay, next question. Sorry.
Oh, go ahead. Oh, go ahead.
Yeah, I mean, I was just going to go to the next question. I feel like that's been answered. For California residents, can they create LLC in a different state? Do they have to pay California fees? So my understanding, and I'm not an expert on this, but California, I mean, as a resident in California, you don't necessarily have to establish an LLC in that state. You can establish it in a different state. And I understand the reasoning because the franchise fee, the annual fee in California is I think the highest in the country. As far as do you have to pay California fees, my also understanding is if your LLC is considered to be doing business in California, then California wants that fee to be paid. And doing business in California can simply mean being in California, like you're living in California and you take a phone call that engages in the business associated with that LLC, and you're essentially doing business in California, and now the California wants that fee. So, but you want to have a conversation about that with someone who is familiar and establishes LLCs inside California. Can you personally buy a property out of an IRA or LLC? Is that considered a conflict of interest? I'd like to buy a home through my IRA, and when I retire, purchase it out of the IRA. Is there any way to legally do this? No. you can take the property as a distribution to you, but you can't buy it from your IRA. You are a disqualified person to your IRA, so you can't, or an LLC held by your IRA, the same thing. You can't buy that property, but you can distribute it to you. You can have it distributed to you, and then that would be a taxable event. You'd have to pay taxes on the distribution unless it's a Roth, and the value of your retirement account would go down by the removal of that asset. If an LLC has 2 IRA members and a third member personal funds, how should a new property title be taken? Well, the property would be in the name of the IRA, or in the name of the LLC. Show the 2 on behalf of IRAs and a third personal member with percentage ownership. So the LLC would be a single entity. You've established ABC LLC with the members being the 2 IRAs and then the third person as a member in that LLC. And now the LLC goes and buys the property. So the LLC is who holds title on that property. The others are the members or owners of the LLC itself. When setting up the checking account for the LLC, does it need to be an IRA account, or does a standard business banking account suffice? When you go to set up the checking account for the LLC, you're establishing an LLC bank account. So the bank that you're going to open with is going to ask you for certain documentation for the LLC, and that bank account will be established under the LLC. The member or owner of that LLC would be the IRA. So it's funded by the LLC. The money that's going into that bank account is coming from the IRA, but the account itself would be established under the LLC. Can the self-directed IRA buy a loan or trust deed that a bank holds on a building held in another LLC that is owned by a disqualified person as the sole member of that building LLC? No. Just simply that you said, as soon as I saw a disqualified person, the answer is no. An IRA can't buy an investment from a disqualified person. If I have multiple LLCs in my IRA, can I shift money from one LLC to another as needed? You would have to move money from your LLC back to the IRA, essentially as a return on investment, and then you would move the money from the IRA to the other LLC as a additional funding. So you can't just shift money between the LLCs. It has to flow back to the IRA and from the IRA back to the other LLC. Michael, you got anything you want to add to that?
That probably sounds proper.
Yeah. The LLC within the IRA is primarily to limit liability, it seems. I would say the LLC within the IRA is primarily to provide checkbook control, but that's okay. It seems that an umbrella insurance policy for $5 million is perhaps a better option. Opinion: I use umbrella. Umbrella doesn't protect me as I engage in fraud either. Again, it's an apple. I don't think you're talking about the same thing. The LLC is primarily used to give the account holder checkbook control over their funds. An umbrella insurance policy becomes more about liability protection than, and it's different than an LLC. Michael, I'm going to leave you to add any additional insight on that.
Well, I mean, you can always purchase insurance to cover certain liabilities, but even if you have a very high coverage limit, that's fine. But there are instances where the insurer, and of course insurers always try to deny coverage, right? So, an insurance policy does not necessarily always protect you in every instance. So if that was the case, nobody would need an LLC or a corporation. You should always, if we're talking about the context of IRA-owned LLC, you still want that liability protection, all things otherwise being okay with the setup of the LLC. Okay, next question. We're getting towards the end here. We're in the last 10 or so. I appreciate the 25–30% of you that hung around for this long. If a disqualified person, he said unqualified, but I'm going to
assume you mean if a disqualified person made a temporary loan to an LLC, can the loan be paid back to that disqualified person? A disqualified person is not allowed to make a temporary loan to an LLC. It's as simple as that. If not, can the loan be paid back to a qualified member of the LLC? Yeah, I mean, a disqualified person can't make a loan to an LLC. Like if you have an IRA, or if you're a member of an LLC, your IRA can't loan to that LLC. If your IRA is a member of an LLC, you personally can't make a loan to that LLC. Not even a short period of time for one day, you can't loan it. As soon as you loan the money, that's a prohibited transaction, so you can't do it. How much is the management fee to Entrust for the management of the self-directed IRA? We have an annual fee where we either have a flat per asset fee or we have a fee based on the value of the account. You can see a detailed list of our fees. Please go to our website, theentrustgroup.com, and click on fees. It's at the top of the screen next to the green login button or the yellow open an account button, and just see our fees there. Is there a benefit to having other assets inside an LLC from my Roth IRA, like a private placement or cryptocurrencies? And then again, ask about fees. If you want to invest in cryptocurrencies, because that requires you to have the wallet that cryptocurrency needs to hold, we don't have a platform to hold the wallet. So if you wanted to invest in cryptocurrencies, you would have to establish an LLC, because we don't have the capability to hold cryptocurrencies directly inside your retirement account. An account can invest in cryptocurrencies as an investment if you want, but you would need an LLC. As far as the benefit to having other assets like a private placement or cryptocurrencies, I mean, private placements oftentimes are LLCs, so you would have an LLC invest in an LLC. I mean, Michael covered the benefits. Potentially there can be less fees depending upon how many assets you're planning on holding, and the custodian fees. You're creating a single entity inside your account, and you get some liability protection depending upon how you structure the LLC. I mean, I think Michael covered the benefits that you get from having an LLC. Whether it's real estate or anything else, those benefits don't change. But again, cryptocurrencies, you have to with Entrust anyway, you have to do an LLC. Can money from hard money and or private money lenders be deposited into a self-directed IRA and then check writing commence? Well, if you want to write the check, yes, you can put money into a self-directed IRA and then instruct us to use the IRA as a hard money lender or to lend money. If you're not creating an LLC, then the IRA is going to be the lender, and you instruct Entrust, you send us the promissory note, the loan documents, and collateral if it's collateralized, and everything's in the name of the IRA, and we write the check to lend the money. If you want to write your own checks, then you have to go through the LLC. And again, that's kind of the whole point of this presentation, was how to get checkbook control through an LLC. Next question, why can't you roll a 401k to a traditional IRA that can own the LLC? You can. You can. I mean, unless you're still working for the company in which you have that 401k plan, you might not be able to roll to an IRA that can then invest in the LLC. But in general, that's what a lot of people do, is they roll it from an old 401k for a company they used to work for into a traditional IRA with Entrust, and then they instruct Entrust to purchase the ownership, the membership, through the IRA of that LLC, and then they have checkbook control. Next question, do you provide the adoption agreement and plan documents for the individual 401k that you offer, or are they provided by another entity? We provide them. Next question, what are attorney fees to establish an LLC and the ongoing maintenance to the attorney? I mean, Michael, you said around $1,000. You guys, is there any ongoing fees that typically get charged with an LLC, or is they kind of all upfront fees?
Yeah, not through me. There's not a standard ongoing fee. Obviously, if you need my advice, and I'm going to charge my time for that after the LLC is set up, at least if it's significant enough of a project. Yeah.
Next question, how do I submit an invoice to Entrust for setting up the IN? You can either submit it online once your account's established online through the portal, or you can email or fax it to us. We have a form called a payment authorization letter, which can, again, either be completed directly online when you log into your account and just enter all the information into the portal and upload the invoice and we'll pay the bill, or you can email or fax it to us, the form and a PDF of the form and the bill. For Michael, can you set up the LLC to conduct a real estate conduct real estate business in Maryland?
Yeah, you can form a Missouri LLC that can do business in any state. You know, as Bill said, you'll need to register that LLC in each state where you're doing business. The nice thing about Missouri is the setup fee is quite low. It's $50 to file articles of organization, and there's no ongoing annual fee from Missouri, but most states do charge an annual fee. So yeah, the answer to your question is yes.
Do you, Michael, do you establish LLCs only in Missouri, or do you establish them in other states? Are you even able to? Are you allowed to?
I cannot. So that would be practice of law in the other state. Yeah.
Okay. Next to last question, the penultimate question: can you buy in a foreign country? And I mentioned this earlier, you can buy in a foreign country, but note that depending upon the country, the likelihood is that you're going to have to establish some kind of entity like the equivalent of an LLC, but not necessarily an LLC, but some kind of entity in that country in order to invest in that country. It's not universal. It depends upon the country, and it's your responsibility to do that research and due diligence. Last question, can an IRA LLC purchase a current rental property acquired by IRA owners cash many years ago? The answer to that is no. That would be a prohibited transaction. Okay, wow, this was a long one. Sorry appreciate those of you who hung out, and Michael in particular, appreciate this ended up being a lot longer than we had talked about, but here we are. Thank you so much for stepping in and handling this. You were great. I hope that you hear from some people and maybe get some business out of it. And for everybody who's still here, thanks again. And don't hesitate to reach out to myself if you have self-directed IRA questions, and to Michael if you need any legal advice. Thanks, everybody.